Welcome to episode 9 of the AFA Gen X podcast. My name is Ashley Mahadia, National Chair of the Gen X Community of Practice and your host for this episode. A big thank you to the AFA for allowing us to host this podcast and to our supporting partner, Advice Intelligence, for powering this episode. Lots of education in the past has been about retail insurance and not much about group insurance. Group insurance is cover that is provided to a group of people linked by a common factor, such as employees of a company, members of an association, or members of a super fund. In this episode, we speak to Neil Robinson, Senior Relationship Manager in Group Insurance, and Shabab Maqsood, Head of Client Service at Honan Financial Services. Neil and Shabab, welcome to the AFA Gen X podcast. I look forward to learning more about group insurance today.
Thanks, Ash. Looking forward to it.
Thanks, Ash. Glad to be here.
Let's get into it. Neil, what is group insurance and what are the different types of group insurance?
Yeah, thanks, Ash. So, let's start with the classic Google definition, which will tell you that group insurance is insurance cover provided by a group of people linked to a common factor. So what does that mean for us in the Australian market? Well, there's really two segments we want to concentrate on. One is insurance, which is for members of a superannuation fund. So that's group insurance. And the second is insurance for employees of a single employer, also known as corporate group insurance. And that's really where we're going to spend most of today's conversation around. And we're going to do that for a couple of reasons. One, it's heavily dominated by advisors and brokers. So generally employers need help, they need support. They won't go direct to insurers. And secondly, as I think you'll hear today, we think there's lots of opportunity there to grow the market and an opportunity for advisors like yourselves to diversify their business. And just to give you a context of the size of this corporate group insurance market, currently it's approximately $780 million of premium. So just to give you some context, it's a reasonable size market segment. And then I think finally, just to sort of answer that question, Ash, to set the scene, what products are we talking about in group insurance? Well, we're talking about two mainly. We're talking about group life, so life insurance and total permanent disability, which most people will be aware of in a retail space. So same kind of product, just purchased in a group environment. And then the second is group income protection. So again, the income protection that you're used to seeing in that retail space, but purchased in a group environment. And I think my last sort of opening comment is we don't really have a group trauma market. You can sort of add trauma on as an ancillary benefit to income protection, but there isn't a group trauma market like you might see in the individual space. So that's sort of what we mean by group insurance, Ash.
Thank you. Shabab, what are the key differences between retail insurance and group insurance?
Yeah, absolutely. So in terms of the retail insurance, it's generally, when you say retail insurance, is an individual purchasing insurance for themselves. Whereas on the group side, it's generally, we'll talk more about this as we go down the podcast, it's an employer usually buying it for their employees as a group, as a way of employee benefits, in the form of employee benefits. So when you look at what some of the key differences, for example, from a group insurance perspective, employees are automatically enrolled into the group plan up to those automatic acceptance limits, which really reduces or minimizes the underwriting, the level of underwriting required. Whereas from a retail insurance, as you'd all know, an individual applying for retail life TPD income protection insurance would have to go through the full underwriting process to get the cover. In relation to a group insurance, the way the terms are negotiated with the insurers, we can also negotiate what we call a rate guarantee period. Depending on the market, that can be anywhere between 2 to 3 years. The rates are locked in for a period of time, which gives the client certainty on the cost of premiums over a long period of time, for example. Whereas on the other hand, as you know, with the retail insurance, for individual policies, they are reviewed each year in terms of the pricing, so they can fluctuate. And the other, obviously, the key difference that I was also explaining earlier was from a retail insurance or individual personal policy, it's owned by the life insured, whereas from a group policy, it's owned by the employer, which is the employer purchasing the policy on behalf of their employees in the form of an employee benefit.
Thank you. And Neil, who's the typical customer for group insurance?
Yeah, good question, Ash, because this is sort of, a little bit horses for courses. This isn't for everyone. So I think that's really important just to sort of talk that through. So generally speaking, we're talking about an employer, usually 20 employees or more, usually white collar, not always, but you're usually talking about a white collar workforce. And, as I said, horses for courses is very much certain industries that are more likely to either have this type of benefit or want to purchase this type of insurance. And those are financial services. So, your banks, your building societies, investment banks, for example, tech. So all of tech, all of IT, particularly in the cloud type businesses, professional services, a lot of law firms, whether it be local or national, will invest in group insurance. Pharmaceutical is another one. And then just to contradict myself just a little bit, if I can, from a blue collar perspective, mining. So some, not necessarily the miners themselves going underground, but the sort of the rest of the mining business is quite rich in this type of group insurance. The other features, if you like, of a typical customer are they're usually a paternal type employer. So they're an employer that cares about their staff, isn't necessarily an industry that cash is king and it's all about cash, and we don't necessarily sort of look beyond that. I won't call out any particular occupations or jobs around that. We talk, Shabab and I have already talked about benefits. If an employer makes this purchase, and let's just be clear, this is a discretionary spend. If you're talking to an employer, they don't have to provide this. It's not workers' comp, it is a discretionary spend. So you're talking about companies that invest in benefits. So I would say typical customer is benefit rich. They can often be a subsidiary of a multinational company. So often multinationals have a global benefits mandate that they need to provide this cover, and a lot of them struggle in Australia how to do that. So they might have a small headcount here, but multinationals is definitely a typical customer. And I think lastly, Ash, just any of these industries that are in particularly tight labour markets. So if they're really competing for talent, group insurance can be a great employee benefit. I'm not going to get into tax advice, but income protection, group income protection particularly can be tax friendly. If you talk to lots of employers, there's lots of great funky things they want to do around employee benefits, but we've got this horrible thing in Australia called fringe benefits tax, and it puts it kind of puts a dampener on a lot of these things. Again, seek your own tax advice, but income protection is a great one that generally isn't caught up in FBT. So that gives you a bit of a feel for a typical group insurance customer.
That's awesome, Neil. Shabab, we're talking about benefits. What are the key benefits of group insurance to the customer?
Absolutely. Obviously, Neil touched on a few of these. In terms of the real benefit and conversations we're having with clients at the moment, it's really about the attraction and retention of talent. Some of the industries that we just pointed out earlier, tech, high-end financial services, legal, these professions in Australia, the talent market is quite tight, meaning that employers are struggling to find the right talent. So it's not just about the salary and the compensation package they're getting. They really need to start looking at benefits for their employees, because the employees are asking for what else are you offering us outside our salary package that promotes our overall health and well-being. So this is where the group income protection, the group life TPD comes in, because it provides that peace of mind for the employees, knowing that if something were to happen to them, they know that they've got certain level of cover. So it's really that attraction and retention of talent that the companies are able to differentiate themselves from their competitors. Some of the industries we pointed out earlier, again, especially the tech market and financial services. Legal side is that their peers are providing this. The companies, they're coming from multinational companies, coming from overseas who have an Australian office. They're providing these benefits because they would like to replicate what's being provided in their headquarters or other global offices, and they would like to replicate them in Australia to make sure they're meeting market benchmark, and obviously to make sure that the benefits aren't, discriminatory amongst different geographies. So it's really aligning that, and that's some of the main benefits of having this group insurance cover. And we spoke about another different angle, and sometimes that's often overlooked, in my opinion, many of the conversations that advisors have with clients, is it's also the group income protection, especially, it also protects the needs of the business, because protecting the business, if something were to happen to an employee, the question that we often ask our clients is how long can you pay an employee if they were off sick for a long period of time once they've exhausted their sick leave and annual leave, etc. Because what's the moral right thing to do? Because when you do have the conversation with the client, they'll be like, oh, hang on. Yes, I did have an employee who was off sick for a year or 2 years, and we continued to pay them because we just couldn't stop paying them. It wouldn't be the right thing to do. So once a company invests in, for example, a group income protection insurance, it can be seen as a way of transferring that risk from the company's balance sheet onto the insurer. If something were to happen, then the insurer can come in, fill in, and take over the payment of those lost income through a group IP policy.
Neil, anything to add?
No, just really want to reinforce that last point. I personally help employers put in a new group insurance for the first time, and I've been a bit fluffy with them, talked about all the nice benefits of launching a new staff benefit, but actually the feedback I've had is, you know what, we've now got a tool to manage non-work related injury and illness, and that's it's a really important, you could call it an unintended consequence, but it's actually a really important point. And I think what that brings us back to is you've got to be able to have a financial conversation with an employer, as I'm sure you would when you're talking to a family about why have insurance for your family. It's the same why have it for an employer. You've got to talk about that return on investment. So I think you've got to talk to the employer about what is the cost to your business if somebody is off long term, or what is the cost to your business if you can't attract and retain staff. And if you can just have some really high level conversations, it's going to speak for itself when you talk about the sort of cost of these group insurances.
Thank you. And how do we get advisors to sell the merits of group insurance? We'll start with you, Shabab.
Yeah, absolutely. So in terms of really the merits of group insurance, I think the first thing we need to do is look at your target market. Who are we actually targeting? Finding that niche. Like Neil said before, it's not for everybody. Not every industry in Australia actually offers group, employee benefits in the form of insured benefits. So it's about really finding that target market, whether it's a geography or whether it's an industry specialization. And that would be the first step for us. And in terms of obviously looking at, it's really about articulating that ROI that again we spoke about to the clients, because the conversations you're having is very different to an individual mom and dad who's buying life insurance. You're speaking to a CEO, a CFO, or a HR business partner, or a chief human resource officer. So the conversations are conversations around ROI and the financial metrics, as that Neil pointed out. So what is the opportunity cost of not having this in place? What is the cost of not being able to attract and retain talent? How much are you paying to recruiters to get talent and still struggling in the market? If something were to happen to an employee, how long can you continue to pay them for? So these are some of the ways that are having those robust conversations. Finding your target market first is my first thing. I would say it's to find geography or industry specialization. Go with that, and then having that robust conversation around the financial metrics, the ROIs, and that's where I would say the focus points should be. Neil?
Yeah, look, I totally agree with with all of that. I think the only thing I would add is corporates and employers can be terrible at making decisions. And I've been there myself. You know, you sort of sell the benefits, but corporates can be really hard to make decisions. So I think, you know, the one thing I'd add to that great advice is find out up front how the company allocates budget, how they make decisions, who is the right person. And I'm as guilty as anyone. You talk to who you think the decision maker is, but ultimately they're not the decision maker. So you've got to be respectful of your own time as well as the potential client's time. So understand that decision making up front, because you're quite right. Employers are not an individual or a family, and they operate differently. Timing is everything. You know, when if you're looking at a current policy that you want to become the advisor on, when's the renewal date? When does that 2 or 3 year rate guarantee that you talked about at the start expire? Or if it's a new plan, and I just want to say, Ash, I think that's where Shabab and I have the most energy for an opportunity. I think growing this market is the exciting part, that there's lots of employers out there that would benefit from considering group insurance, and that's the opportunity. So again, when I talk about timing is everything, when is their budget set? When is their pay review? You know, great tactic is, you know, if you know the employer's looking at putting a 3% pay rise in for the following year, that's the time to talk about introducing group insurance. Maybe they get a 2.5% or 2% pay rise and a new employee benefit, for example. So I think in terms of selling the opportunity techniques, timing, and just remember, corporates are not good at making decisions. So, you know, get your tactics right.
Yeah. Can I just add one more thing to that? It's just mainly also around the lead time for some of these opportunities once you get an opportunity to closing, because obviously from an individual personal policy, it's much quicker than a group, because especially because, as we was taken before, if it's a new plan, it's a discretionary spend when the company doesn't have that budget to make that spend. So it's about being patient, having the right conversations, constantly, you know, following up, having a plan in place, and knowing that it's going to take a bit of time, especially if it's a new plan.
Thank you. And what are the things advisors need to consider when considering going into group insurance? We'll start with you, Neil.
Yeah, look, there's definitely a few. A couple I think we should just sort of talk about. One is, what's your insurer relationships? You probably, not everyone, but you've probably got really strong relationships with your BDM, your retail BDM, your claims people at your insurer. You're probably going to need new relationships or a new network around the insurers, and not all insurers are in the group market. So your insurers that you might be using from a retail perspective, yes, there is some overlap, but there's also some differences as well. So I think, you know, I'm sure your retail BDMs can connect you, but just get your insurer relationships will need to just be tweaked a little bit. So I think that's important. Once you get an opportunity, you need to be able to respond with an insurance solution that's fit for purpose. The second is, and Shabab, you can build on this, I'm sure, but there's definitely less red tape, which is, you know, one of the appeals. And hopefully, I think, you know, certainly when I talk to advisors, you know, one of the impacts of this increased focus on regulation has been, let's try and focus on less clients, but more high value clients. I think group insurance is a high value client because, you know, my advice would be, don't just think about the employer as your customer. If you're clever about this, you can wrap your retail solutions into this. So what do I mean by that? Say you're talking to an employer of 50 individuals. If you're clever, you've suddenly got 50 new employees that could benefit from financial advice. So my message would be, you've got a great employer. They've just put in place a new life insurance policy or income protection policy, but that might not be enough for you. So you can really work with the employer to give financial advice around this. And a great example is what we call continuation options. So nearly all of these group products have a feature called a continuation option, which means if somebody leaves the employer, they can take the benefits of the group policy with them it'll convert to a retail policy, which you can obviously take commission on. So my last comment in this part, Ash, is get real good at con options, because that can be, I wouldn't say easy, but a real opportunity to drive more revenue from the group policy.
Shabab?
No, absolutely. I suppose the other angle we could also take here is looking at just being wary of the administration and the servicing requirements for a group plan, because again, you're dealing with an employer who has number of employees who are the lives insured. So just understanding, knowing who your client is, because from a retail insurance perspective, obviously you're talking to a mum and dad, whereas from a group insurance perspective, you've got your main corporate, which is your client, and then you've got your life insured who are the employees. So there is a fair bit of administration and servicing that is required in order for the ongoing management of the group plan. So just something to be wary of, making sure that any advisor looking into this source of revenue for a group income protection is just or a group employee benefit perspective, they're fully aware of the ongoing requirements that is needed of them. And the only other thing I can think of is obviously, yes, we said there's minimal underwriting because you're able to negotiate with the group insurer what we call automatic acceptance limits. But again, any employees who are eligible for cover above those limits can go through underwriting to apply for cover above those limits. It's just about being wary of that as well.
So would you say that setting the remuneration right and understanding the scope of work is key to group insurance?
Absolutely. Yeah, absolutely. I think that's key, because understanding what is required of that is how, like in terms of the employees, how many employees are there, what kind of queries are we getting on a day-to-day basis from the employees? Do we need to do education sessions and webinars to educate the employees on their benefits? So, and what's the claims right? How much work is involved in relation to the ongoing management of the claim? So really understanding the scope of work and then setting up a commission based on that. Obviously, we've got some clients, they're looking into the fee for service model as well. So it's just really understanding what works for that particular client and the work that is required. Yeah.
Any final words, Neil?
Yeah, look, I think firstly, thank you for having us on the podcast. I've really enjoyed sort of, talking about group insurance. And I think, I absolutely believe there's an opportunity for advisors to diversify, make a profit from group insurance. But I also think, don't underestimate, it can be, what it is, really rewarding helping an employer help their employees. And that's what we're doing here. So it might be a different kind of rewarding feature that perhaps some advisors are used to, but I think helping an employer manage group insurance, and again, at claim time, and we always talk about this with advisors, it's no different in the group space. The time of truth is when there is a claim, and if you can help the employer, help the employee and their family when they need it most, there's a couple of things. One, you become the trusted advisor, and that's where you want to get to when you're talking to an employer, is become that trusted advisor. They'll then talk to their other business networks. They will then refer you. And I think for the employer, the word of mouth, particularly within a smaller business where they say, hey, I was really unwell and the company really looked after me, it sends such a powerful message, and you'll get that feedback as an advisor. So yes, I think there's business and profit opportunities, but it's also really, really rewarding. So look, if any of your listeners would like to reach out to me on LinkedIn to talk about group insurance, please, feel free to do so.
Shabab?
Yeah, no, thank you again for the opportunity to be here, Ash. It's been great talking to you and Neil about group insurance. Again, obviously, just my last words would be just understanding from any advisor looking into group insurance, it's just understanding who your client is. It is very different from a mom and dad, for example, purchasing a life insurance product. It is a corporate. Corporates work very differently, and just being able to articulate very clearly the benefits of group insurance and how it will benefit the business and their employees in the long run, I believe is a key to success in this industry. Yeah.
Neil and Shabab, thank you for your time today.
No problem.
Thanks, Ash.
We hope that you've enjoyed episode 9 of the AFA Gen X podcast. A huge shout out to Neil and Shabab for their insights on group insurance. Thanks again to the AFA and Advice Intelligence. See you soon.